Hi everyone, Gianni DePoci here with you for Theo Trade, and today is Tuesday, the 29th of April, 2025. We are seeing the rally in stocks continue here today, but I think the real test is going to come on a couple of fronts this week. The first one is going to be tomorrow morning and the preliminary reading for the first quarter GDP. There are some estimates that it will come in negative. Could it be a situation where good news is bad news and bad news is good news, meaning that if GDP comes in below estimates or in negative territory, could make the Fed a bit more dovish, but if it comes in better than expected, it could have the Fed pump the brakes on the prospects of any future rate cuts in the near term. So that's what's on my radar. And then, of course, there is big tech earnings. So we'll look at those charts in just a moment. But I want to draw your attention to a couple things here at the index level. The S&P 500 continues to squeeze. I like how we took out this high from the 10th of April. The big test for me, the all clear signal for me, is if we can take out this high from the 25th of March. We do have a higher low, a slight higher low here from last Monday, and we do have a higher high here. So you could make an argument that there is a short-term bull trend established. You're basically seeing the Nasdaq neck and neck with the S&P here. I've been talking a lot about how the tech sector is the most important one for the market overall. It makes up around 30% of the S&P 500, and we're going to live and die by tech at this point. Now, the good news is that last week we saw technology emerge as the strongest performing sector for the second time in 3 weeks. And depending on how the big tech earnings go this week, I think we could make it 3 out of 4. And if we do, we have to start taking this rally a lot more seriously. And it gets even better because last week, the semiconductor sector did very well. Also, it was up double digits and it outperformed QQQ and the technology ETF. We also saw a big bid come into the software space, and you can see software IGV, the ETF, up over 1.25% on the day. So this is a very good sign because the software sector has been beaten down pretty hard. A lot of names in tech and in software have really been hammered. But if you take a look at the Dow here, we are seeing the leadership come from the Dow today at the index level. So it's not fully a bullish day, but I do think that we are waiting on some really important big tech earnings within the Mag 7. So let's go ahead and take a look at some of those names. We have Amazon set to report on Thursday after the close. And, you do have this higher low here from last Monday as well. But, same thing here. It seems like there are a lot of highs on the 25th of March that need to be exceeded in a lot of these names. You take a look at Meta. Meta has earnings after the close today, so this is going to be an important one. And here too, the high from the 25th. So it seems like March 25th was a really important day. We're seeing that not only at the index level, but on some individual names. You also have Microsoft earnings that are set to come out today after the close. And I actually pointed this out in Theo Live chat today. You have this potential bottoming formation here. Now, does that automatically mean that the low is complete in Microsoft? No, it does not mean that. But if you do clear this upper horizontal trend line acting as resistance, it does give bulls some momentum to carry this rally a bit further to the upside. And it is interesting to point out here how, we are really close to taking out that high from the 25th of March in this particular instance. So something to definitely keep on one's radar. Later this week, we actually have Apple earnings as well on Thursday. So I think, I mentioned earlier market living and dying by tech. I think by after this week, based on how these big tech names respond to earnings, if we see something that plays out similar to what Tesla did, where we had a pretty negative earnings report last week, but the stock responded well. You can make an argument and say, well, Gianni, it's because Elon Musk is going to be spending more time back at Tesla instead of Doge. And I'd say, okay, fine, but the stock still responded well to bad news. And as a rule, when a market or a stock responds to bad news in a positive way, it's usually bullish for the stock. And the inverse is true. If you have a market or a stock that responds to good news in a negative way, it's usually a bad omen. So, Tesla here pressing up on this resistance here. You actually had a slightly higher high on the 27th of March, haven't taken that out. But similar story, you break above that resistance point, you could see this thing squeeze another 60 bucks higher into the 340, 350 area. And then you better believe there's going to be a lot of chasing to the upside in this market. We do see the VIX still coming down below 30. I think that the volatility case isn't as strong, so that continues to be on our radar. And then another big tech name that I'm watching, one that we actually initiated a position on in the chat room, is on Netflix. Netflix is looking really good, hitting a new all-time high. But I do think that the tech stock that is driving and that is going to define this bull market, if it comes back, is Palantir. So this is a Trinity trade name. This is a $1 million challenge name. We've been long Palantir. It looks strong. We have a short-term target of 125. We've had this for a couple of weeks, but I think the stock could eventually go much higher, potentially even to the 180 area. So in this environment, even though there is volatility still, even though there is chop, even though there are, stocks gapping up, gapping down, we look for the names that have held up the best with the best technical patterns and the ones that are close to or have already made new highs. Those are the ones that we need to focus on the most because those are most likely to emerge as the leaders. I'm also very closely tracking the quantum sector. A bit quiet today, but you have some names in this space like IonQ that have held up pretty well, and I think we're just waiting for some positive headlines or a positive development. I've kind of made the case that if the U.S. wants to maintain its dominant position as the innovator for global tech, there needs to be some big advancements in quantum. It seems like, when it comes to China, the playing field has become more level on the AI front. Speaking of China, you can see that China has actually been underperforming here. U.S. market's up, China market is down, and I'm still watching some of these names for decent setups like Alibaba and NetEase. NetEase especially looking like a stronger name. So that is still on my radar. We're seeing interest rates come down with the long and the 30-year bond rates dropping the most. That's why we're seeing the 30-year bond rally the most. And to me, this is a pretty strong signal to Jerome Powell and the Fed that, hey, it's time to cut rates. We don't want to see long-term rates dropping too fast with short-term rates still high. So if we bring short-term rates down and let these long-term rates fall, that's going to be bullish for bonds. It's going to keep the yield curve nice and steep, which is what we want. And all of this ultimately comes back down to crude oil prices dropping down again. And we've been talking about this being bearish on crude oil. This is one of the reasons why I take issues about the statements being thrown around that tariffs are automatically inflationary. Again, crude oil is the primary driver of inflation expectations. Tariffs are a tax, okay? Taxes are considered to be something that's contractionary when it comes to the economy. You impose taxes when the economy is overheating. So that's not exactly building a good case for inflation because then you have to assume that consumers don't change their spending habits and that they'll eat the cost. If they stop spending on those tariffed goods, then it's not going to show up in inflation in the long run. So there's a lot of moving parts. We've been talking about this a lot in the Theo Trade chat room, and not to just believe everything that you hear up front. So I'm watching that very closely. I do think that Bitcoin has bottomed above 88 to 90,000. I see little to no reason to be bearish Bitcoin. And in fact, we have started to see Bitcoin outperform gold on a percentage basis. But you take a look at Ethereum. Ethereum's actually outperforming on a percentage basis today. Big opportunities here if we take out that high once again. Well, I guess in this case it's the 24th of March. So there are those highs in late March where if we take those out to the upside, guys, I think that bears are going to have quite a bit of work cut out for them to make it known that they are still in control of this market. And one of the things being discussed before I talk about metals, do you often see comparisons and opinions being thrown out and saying, oh, is this going to be a V bottom or a W bottom? And I always say, well, look at what the Fed was doing during past instances. Let's actually zoom out on this and talk about it real quick. Because when we had the rally off the low in 2022, I would call that more of a W bottom. He had that low in June, another low again in October, and that was the low. Well, the Fed was very hawkish around that time. They embarked on one of their most aggressive rate hike campaigns in history. You go back to 2020, it was a V bottom. That was a dovish Fed. You go back to 2018, that was a dovish Fed. It was a V bottom. You go back to 2015, 2016, that was the taper tantrum. That was a W bottom. So you had a hawkish Fed. Okay. 2011 was a V bottom. You had a hawkish Fed. So I think that the odds of a V bottom are higher if the Fed's going to be dovish, whereas if the Fed's going to be hawkish, the odds of a W bottom are greater. So that's why I'm watching tomorrow's GDP report so carefully, because I think that it's going to define whether we see more volatility into the summer or whether we see this stock market climb a wall of worry, to new highs eventually. So let's take a look at gold and silver real quick since it's talk of the town. Still gold down on the day, silver barely up. I actually would consider this a risk-on day, even though it's quiet. GDX is down, but silver miners are down less. So I would look for some more upside in precious metals this week, specifically with leadership coming from silver mining shares. A lot of those have been depressed. We've been talking about positions in Pan American Silver, but some of our best mining plays have already been in effect for a few months now, so we're watching that very carefully. But that's pretty much everything that I wanted to cover with you. Thank you so much for watching. I would encourage you guys to check out my friend and colleagues' Deep Currents webinar that is coming up this Thursday. He's going to be going live to tell you about how he is actually in positive territory on the year. Blake Young will be taking you through what he is seeing in this market. So Deep Currents beating the S&P 500 by a pretty nice margin and actually up on the year. So you don't want to miss that. Details can be found on our site. Any questions, just feel free to reach out. So again, thanks for tuning in, everyone, and I will see you in the chat room. Take care.